You know what's been frustrating me? Spending hours analyzing market charts, then hours editing the video, and then only to post the video when the setups are already done. That changes today. I'm streamlining to Vantage and TradingView for analysis while still using the Exness account though. And this is because we want to have shorter videos, deeper analysis into a particular currency, and more timely posts so that this information is out there as fast as possible. So let's see how this works with today's pair Euro US dollar breakdown. So today I'm introducing two new concepts: drawing market structure backwards and then an indicator which doesn't really do anything for you but just shows you, as every other indicator does, showing you things. Well, let's take a good look at what these two things are. We're going to start with drawing market structure backwards. This concept is, as we all know, drawing market structure the same way we know, but this time backwards. For those of you who know how to draw market structure very well, market structure is drawn by looking upwards, looking from the past and coming into the current situation. This is how you draw market structure. So in case you do not know how to draw market structure and this is your first time watching my video, I'll leave a link up here for the former market structure and how to draw it. You could also draw it using the zigzag indicator. However, in this case, how about you notice drawing it backwards? Imagine you could draw market structure backwards like this and still know exactly what price is doing. Isn't that going to be interesting for you? Very, very fast. So we're going to do that here. Also, the indicator we're going to be introducing, stick long enough, you're going to see it as this video goes on. For drawing market structure backwards, we're going to start from exactly where market is. This is where market is currently at, and we're going to go, if there is a low or a high just below it, we're going to start from that point. So this is it. This is a high before it, and so I'm looking for lows after this high. I'm going to go. Now after this low, I'm looking for all highs. This is the high. After this, I'm looking for lows. This is the low. After this again, I'm looking for high. So I'm looking for just areas where the pin just stops. You see right there. And my dear friends, we have market structure for this weekly time frame. Again, this is the Euro US dollar. I'm going to pull out the structure. You can see it right here. This is an uptrend. As you can see, we have consecutive higher highs and consecutive higher lows. Putting this back into the market, we have this situation. Now, normally when we trade, we do first thing first, we find market structure. The next thing I want to see on this chart is discounts and premium zones. The discount zones are places where I should find buying opportunities. The premium zones are places where I should find selling opportunities. If I find demands and supply zones within these areas, I will then look at those demand and supply zone as credible to trade or not credible to trade based on where I find it. For example, I have this demand zone right here. And for those who don't know what discount and supply zones are places, anything below the 50% retracement down to the zero is a discount, meaning it is cheap. It is cheaper to buy here because you will lose less money than buying it up here. Now, premium zones, these are places where you should sell because you will make more money than selling it down here. That's just basically what it is. If I should make it easier for you guys, everything above this point is meant for us to sell. Everything below this point is meant for us to buy. However, I like to see these other lines in between for some specific reasons. I'll be explaining that as time goes on. Now, heading into this analysis, I'm seeing a demand zone. This is a demand zone, but I'm seeing it within a premium area of the weekly structure. This is not a good thing. What do I mean? The word discount means cheap. And if I'm looking for demand, I'm looking for where to buy. Now, I cannot be looking for where to buy in premium. Premium means expensive. So I cannot be looking for something to buy in an expensive area. And this is currently a situation where we have a demand zone in an expensive area. This color, when you see this faint, know it is a weak zone. If you are seeing it this strong, probably around my 20-25, if you are seeing it this strong, then know it is to me a good zone to buy from. So currently this is to me a weak zone. That is what it is to me, a weak, very weak zone. And if it is a weak zone, I do not want to be trading buys in this area, though I will still be watchful of if buying situations are occurring, but I won't be keen to take it. Now, if this is a demand zone on the time frame, is there a demand zone below it in the discount area? Looking through this whole place, I can't find any demand zone on the weekly, so I'll go into the daily. Now, this is where the indicator I was talking about comes into play. You'll find this on TradingView, ICT HTF Candles by Fadi. See right here, you can find it on TradingView only. You can't find it anywhere else. I don't know if you can find it on other brokers. And what do I use this for? So I use this to monitor the higher time frame without having to constantly go there. For example, I drew this zone on the weekly, and you can see exactly where I drew it on the weekly is where it is appearing now on the daily time frame. That is exactly where it is showing up. Let's go back to the weekly. You see it, that exact same place is here. The reason why I like this is it shows me the last sets of 10 candles and the current active candle, so that's a total of 11. It shows me the last 10 candles and the current candle on the higher time frame I selected. I personally selected the weekly, the daily, and the 4 hours, because sometimes I could trade into the 1 hour and use the 1 hour for entry. So I want to see those 4 time frames above it and see exactly what's happening within the last sets of 10 candles. I could then increase it if I want to, just to see more information. So on the last set of 10 candles, this is it. And knowing fully well, I know this zone is not a trustworthy zone for me already, because I am the one who made it in the first place. But I'll still take note of it. This is the weekly zone that I can see. Now on the daily, I'm going to do the same review again. The whole setup. Draw structure, check the Fibonacci placement, and then look if you have good zones in the right area and watch the credibility of those zones to hold or break. Again, we're going to draw from here. This is the high. This is the low before that point. Is there a high? This was a high after it. Well, is there a low between this and this? No. So looking for a high that has a low. So this high has a low here. This low has a high. Now you can see that this structure I'm drawing like a substructure side the entire uptrend. This is what I've been saying all this while in one of my former videos. I'll leave the link of that video up here so you guys will see it. I once said it that if you draw on the higher time frame, if you draw price move like this, right, on the lower time frame you have market structure doing something like this inside there. You have price doing something like this inside there. You just keep seeing this smaller sets of structure. You always see this smaller sets of structure inside it, which this will be the lower time frame structure that is inside this structure. Don't mind my drawing, it's very crappy, I know, but I'm just trying to illustrate something here. So that is what you're seeing right here. I'm going to give this a different color, the higher time frame a different color, so you can just tell straight up. So you can see the higher time frame, the lower time frame, deep blue. The lower time frame, you can see how it's dancing inside it. I want to even show you guys what I'm saying when it comes to Chooch. All right, so you can see that Chooch, that price comes down, come up, made the first high, break above this high, came back for a retest to the zone, and then took off for more moves upwards. Now if I go into lower time frame, you will see that at this bend right here, even at this bend right here, you will find Chooch occurring. In every time you see this turn, you'll find that Chooch occurring. But we don't have the time to do all of that. We are doing a deep dive into the euro against the US dollar right here. Now the deep dive here is we're looking for daily structure, right? Daily structure within the last sets of legs. This is the last leg right here on the daily. Now pulling this last leg, do we have zones to trade off from? Currently it looks like we're going to be having a possible daily zone here. Possible, not certain. Possible. If today's price doesn't come into this area, we have a good daily zone to look out from, right? We have a good daily zone to look out from. But if price comes into this area, we're not certain. So this is, I'll make this yellow in color and I'll call it pending zone. If price comes into this pending zone, then we don't have a trade. And then on the 4 hours, well, on the 4 hours, again, I want to show you what I said about this indicator. So on the 4 hours, you can see exactly where I drew it from this candle's high to this candle's low, you can see how it follows that exact location. It follows that exact location, candle's high to candle's low. And you can see exactly what I said. If this space gets covered up today, we do not have a credible to go with. We do not have a credible zone to go with. But for people trading ICT, they should already be in a trade. Why? Because this is the fair value gap. They call it fair value gap. Even on this indicator, it's called the fair value gap. So they call it the fair value gap. Price came in, mitigated, created a fair value gap in, fair value gap out, which they call sharp turn. So this is the fair value gap in. I just want to show you guys this. This is something I used to use prior. So you see this imbalance going on here. This imbalance going on here and this imbalance here. To them, they should be in a trade already. They would take this trade like this. And I'm telling you, most times this is correct. This is very, very good way of trading though. This is correct. They will take this and they should be aiming for 2 risk to reward ratio, which is around here. And you can see they're actually making like real good progress right now. It's real good progress. It's a good thing. I'm not saying that they are wrong or anything. It's really, really good. And you can see they're aiming for daily highs. And some of them will even go as far as watching the market to see if it will make its way up here. And if it does, well, they made 3 times the amount of money they risked, which is a very, very good strategy in my opinion. So with this, all I want to wait for is pullbacks, right? Pullbacks. On the 4 hours, what I want to wait for is pullbacks. Why? So on the 4 hours, this is the structure we see here. Price is currently here. Hence, we're going to start from where price is. Price is here. High, low. A high, a low. A high. This candle is a news candle, and I'm going to stop right there because this candle is very, very dirty. But however, we already have 2 consecutive lower lows, 2 consecutive higher highs. This is a new lower low. This is not the lower low anyway. That's why I'm not counting this. I said 2, 1, 2, and then 2, 1, 2. So I'm waiting for price to find its way into this good zone. So basically, I'm looking at this 4 hours area. For me, trading now, it means this is my area of visibility. This is where I want to see. I want to see this 4 hours work. What do I mean? I want to see this 4 hours print price down to the demand zones. Why? I have demand zones here. I have one clear demand zone, so give me the good zone color. This is a good zone. And then I have another one here. So this is the strongest area price may give me that print. There is a zone here too. However, it is now above the 50% retracement, so I don't see it as a zone. So this is what I want to look out for. It means in this place, I'm going to clean up this whole chart now. So this is everything that matters to me right now. On the 4 hours, I want to see price come back into this place. I want to see price come back into these sets of zones I have here. And then I want to see price create a bullish engulfing bar. Meaning, if I should sit on the 4 hours or the 2 hours or the 1 hour, I prefer to use the 2 hours anyway. If I should sit on this 1 hour time frame, monitoring this one. So this is what I usually do for myself. Since I'm using the 4 hour structure, I can take away every other thing, every other visibility here, and focus on what I want to focus on. Now I'm focused on just the 4 hours and this 1 hour I'm trading in, or the 2 hours I should be watching out. And I want to see price dip into these zones. I'm going to be watching this area for engulfing. Remember, on the higher time frame, I want to see engulfing. This structure is coming for the 4 hours. Let me explain this clearly. So on the 4 hours, if I'm to watch this market on the 4 hours, what I want to see is price comes down here. What I personally want to see is for price to come down here and then create an engulfing bar, just like what's happening right here. It's create an engulfing bar, a bullish engulfing bar anywhere within this zone. I'll be aiming for a buy trade, right? That's the first move. But if I'm not going to be looking on the 4 hours, and let's say I'm looking at it on the 2 hours, I want to see price come in here and then create the choch structure. So CHCO structure, change of character structure. At the same time, I will still be looking into this 4 hours without having to go back to the 4 hours. That's why this indicator is here. Without having to go back to the 4 hours, I will still be looking at this 4 hours and I'll see when it engulfs. Once I spot that engulfment and I still even have my choke alongside, I'm going to dive into a trade. So basically, I can put price alert right here. Once price makes its way down here, I'll get an alert. Anyways, I'm going to put the alert here. When price comes down to this level, which is the 1.1653, when price comes down to 1.1653 area, I will be looking to start seeing if I get the choke to buy the market on the 2 hours and the 1 hour. So this is it. Deep dive into the euro. This is, to me, better than other ways I analyze the market. If you do enjoy this kind of things, do well to hit the like button, subscribe, and if you also have comments, you have other markets you want me to do a deep dive into, when I'm free, I'll do that deep dive and release the video and add you along with it so you can find it. Thank you for watching, and you can check out market structure automation, how to draw market structure using the zigzag indicator, with the video on your screen. And you can also follow on other daily analysis with the playlist on your screen. See you all on another one. Peace.